Hey guys, Squirrel Crypto here. This is the much awaited part two of my Hedera Hashgraph slash HBAR series. The last video was made a couple of months ago and it was my most viewed video on YouTube that I've ever created. The reception was great. You guys loved it. I asked in that video if you guys wanted me to make more frequent video updates I got a resounding yes. And so this is part two of that series, guys. I was not expecting, to be honest, I was not expecting this much development, this much progress to be made on Hedera Hashgraph in 2 months. And so when I sat down to make this video about a week ago, I began researching everything that I wanted to talk about, starting from where we left off in the last video in terms of the date, so about 2 months ago. And I was overwhelmed with the amount of new additions to the network. And because of this, I wasn't expecting there to be so much information to cover. I started the video researching it last week, researched for a few days, compiled all the facts that I could, all the information that I could, and I still wasn't able to actually get the recording done. And so this week I sat down again at the weekend and decided, let me finish this thing. I got a good start. I almost finished. And so here I am today recording the video. And guys, I think you are going to love this video. There's tons and tons of exciting content. Like I said, there's been so much that's been developed since our last video on HBAR. And I think going forward from this point, this is again going to be another 45 minutes, hour-long video. So I think going forward from this point, I'm going to try and make it a point. I'm thinking every weekend, maybe every Sunday, to release a short video that might be 10 to 15 minutes on HBAR and just update you guys on what happened in the week. Because at this stage, I feel like if I wait for a couple of months, there's just so much information to go over. And it makes it difficult for me. And of course, I know that you guys don't always have the time to sit through an hour-long video. So going forward, I think I'm just going to do like a weekly update every Sunday. And that way we can get smaller, shorter videos, but still get all the information across. And if you guys would like that, just again, please comment in the comments of this video. Let me know that that's what you guys would like. And we'll go ahead and do that. But let's get started, guys. In this video, we're going to talk about some new use cases that have developed over the last couple of months. New progress with certain use cases. We're going to talk about the Hedera token service, which is a huge thing that has been developed in the last 2 months. And so I'm going to talk about the Hedera token service, what it is. I'm going to talk about some of the tokens that are being built on the token service. We're then going to talk about some additions to the governing council. We have 2 new governing council members since we last made this video. Bringing the total up to, I believe, 18 governing council members from 16, I believe it was in the last video. So I'm going to talk about those 2 new governing council members. And we're going to wrap it up by taking a look again at the transactions that have been occurring over the last 2 months, how they differed from the last video that I made, transactions in the network, tons and tons of transaction growth. And we're also going to talk about, of course, the technicals, what I see in terms of price. Of course, the last time I recorded a video, guys, on HBAR, the price of HBAR was about 5 cents. Today it trades at about 30 cents. So we've had a tremendous rise, but honestly, this is just the beginning. I mentioned in my last video, $2 to $5 price target. Stay tuned till the end of this video to hear more about that and any updates to that as well. All right, guys, without further ado, let's jump right into it. We're going to jump into the use cases that have been developing on Hedera over the last couple of months that I didn't talk about in the previous video. All right, guys, real quick, before we start talking about the use cases, I wanted to run this little clip of this video that I found from Reimagine 2020. And it's a very nice little clip for those of you who may be tuning in for the first time and didn't watch my last video on HBAR, which I will post a link to in the description as well if you want to watch that one first. But if you guys want to get a brief overview of what HBAR and Hedera is all about, this video and this interview was a very nice one that kind of talks a little bit about what HBAR is and why it's such a big deal. So let's jump right into it, guys. It's going to be about I think it's about a 2-minute video clip that I'm play here. Let's jump right into it.
Hedera Hashgraph. One, can you tell us a little bit real quick, in your own words, like the difference between blockchain that everybody else kind of sees it from the hyperledgers and Bitcoins and Ethereums to what Hedera is offering, which is a little different.
So we kind of group both of those in the context of distributed ledger technology. Right. And what that means is you can have verifiable records of an event, right? A supply chain being transferred, a token being issued, or even a message being sent from one party to another. The blockchain architecture takes that distributed ledger and creates it as literally a block of individual transactions or batch transactions on that ledger. But in doing so, it incurs some trade-offs from both a performance and security perspective regarding the use of, proof of work or leader-based proof of stake algorithms to continue appending items to that blockchain. For Hedera, we wanted to break that assumption and come up with the solution to that common trilemma around decentralization and performance, as well as security, and provide a model which could be performant at the scale of thousands of transactions per second and truly decentralized in its consensus process. So Hashgraph is a DAG, or directed acyclic graph, as it's used in the term, or in the market. And it's a different data structure that essentially allows nodes in the network to more efficiently come to consensus on the order of events. So rather than needing to wait for everybody to create the right block, a leader to be selected, and that block to be appended, the Hashgraph delivers that same distributed ledger promise with more efficiency.
All right, guys. So really quickly, that was something that I talked about in the last video as well. What is the difference between a DAG, which is what Hedera is, and a blockchain? So they're not exactly the same. They're both distributed ledger technologies. And Donald here just went over the differences between the two, and essentially why Hedera is able to scale more efficiently and is more efficient in general than blockchain. So I have one more clip on this video that I want to show you guys. I'm going to fast forward to that there. Again, it's just like 1 minute and 30 seconds, but I think what he's talking about is quite important. So I'm going to skip to that real quick here, and we'll continue.
Evidence for that. So it's nice to see that they're kind of moving to embrace these public networks as well.
Yeah, great. And what's the relationship there since they are on? Well, maybe you could quickly talk about the governing council. These are the members, the decentralization part of it, that kind of manage the whole ecosystem, as you will. Maybe you want to touch on that.
Sure. So they're I would say a core part of a much broader decentralized ecosystem. But Hedera as an organization is actually a multi-member LLC. And what that means is we're not controlled by a single stakeholder, but this group of our essentially corporate board of directors, which we call the Hedera Governing Council. So these organizations help us make both strategic and tactical decisions about how to build and grow our network and ecosystem. So they help us approve the product roadmap or drive new features and pricing decisions. And our goal is that group is going to be as diverse and representative as possible from different industries, geographies, and areas. So council members today include IBM, Google, two of the world's largest law firms, DLA Pipers and Dentons. Just recently this week, we announced Standard Bank, who was our first node in Africa, which we're very excited about. And even organizations beyond that, the list is ever growing. So we see our council members as core partners for us and helping to grow and build this decentralized technology.
And guys, that's another thing that I covered in the last video. But again, this is one of the reasons that I'm so bullish on Hedera. Imagine putting together the world's biggest, largest, most successful companies in one room and have them all being on the same exact team to grow this new network, this new distributed ledger technology, make it the best that it could possibly be. You have the brightest minds working together, ones that have proven that they know how to get the job done, they know how to build massive networks, and you have them all working together with a common goal, which is to make Hedera a global network that will be used by enterprises all over the world, from every corner of the world. So again, that was just a little brief overview. I felt like that was a good way to talk about the governing council, give you guys an idea of what is the driving force behind the direction of Hedera. And again, keep in mind that initially the nodes on the network will be run by the governing council. There is a plan then to move forward and allow more nodes to be created. And then eventually anyone will be able to run a node. But that's going to be down the road. And that's kind of the path to decentralization that, again, I talked about in the first video. But guys, that was the intro. Just talked a little bit about HBAR and Hedera in general. Now we're going to jump right into the new use cases that I didn't talk about in the last video, ones that have been developing and growing over the last couple of months. All right, guys, so the first use case is AdsDax. AdsDax, as you can see, is a blockchain advertising platform and marketplace that allows people to create, buy, and verify and sell advertising. Now, I just want to take a quick look at these stats because they can tell you how robust the Hedera Hashgraph network is. Take a look at this. Peak transactions per second that have been running on Hedera Hashgraph from AdsDax, 1,372 transactions per second running through live. Like this is happening right now. This was the peak that was hit with this particular application. Average daily transactions recorded in Hedera Hashgraph, nearly 4 million average daily transactions recorded on Hedera Hashgraph. And you can see that the amount of usage that's being pushed through Hedera just through this one application is massive. So we go down here and we can see that it is a live platform, right? This isn't just a white paper or proof of concept. The AdsDax platform currently receives hundreds of millions of ad requests per month and has managed campaigns for over 25 of the Ad Age Top 100 brands. And guys, another reason that I'm so bullish on Hedera and that I like it so much is because, like I've always said in my videos, the driving force behind me choosing to invest in a cryptocurrency is what are they doing today? Who is using the application today? There's tons of cryptocurrencies out there that have these amazing, incredible plans, things that they plan on doing down the road, things that they say they're capable of doing down the road. But when it comes to who's actually doing things, that list becomes very, very small. And Hedera is one of the cryptocurrency networks that is actually today doing what it was intended to do at a massive, massive scale. And so this is just one example of that. And again, one reason why I'm so bullish on Hedera and HBAR. All right, guys, we're going to go on to the next use case, which is SUKU. One thing real quick, guys, I'm going to go through this pretty quickly. This time in my last video, I kind of just went through it. And this time I actually went through each article, highlighted the important points. I'm super excited to use this stuff to make my presentation more efficient. And I'm really excited to have been able to sort of annotate this beforehand to hopefully shorten the video to a more manageable length and allow you guys to get the most important facts out of each article that I share here. So with that being said, guys, let's jump into the next use case, which is SUKU, supply chain as a service. And SUKU actually was running on Ethereum, and they migrated to Hedera Hashgraph, right? So this was February 3rd of 2021, and just a couple of months ago. SUKU today announced that they're the first organization to leverage the Hedera token service. We'll talk more about that in the video down the road, guys. And Hedera Consensus Service, having migrated their product suite from Ethereum to Hedera Hashgraph to benefit from the speed, security, stability, and governance that the third-generation distributed ledger platform provides. SUKU's newly released Infinite iOS platform for tagging authentic sneakers is the first application to migrate to Hedera. So this was a company that was running their applications on Ethereum, but decided that, you know, if they wanted to scale, if they wanted to grow, they wouldn't be able to do that on Ethereum due to the high gas costs and all the other issues with scalability that Ethereum is currently facing. Again, guys, I have nothing against Ethereum. This isn't a my coin versus that coin. That's not what I'm here for. I'm just trying to compare and explain to you guys why this particular company decided to move to Hedera Hashgraph. So their product, the Infinite app, functions as a physical to digital bridge, which is linked to Hedera-based digital title that enables secure ownership transfers, authenticity record lookup, and reporting of lost, stolen products. So there's a little chip that they put inside the sneaker's toe, and this chip connects digitally to Hedera and allows you to essentially track where this shoe has been, who's the actual owner of the shoe, and when that shoe gets sold, who owns it now. So if someone steals a shoe, imagine someone steals your Nikes and tries to sell them to another individual. When that individual tries to verify if these are authentic or if they're legitimate and not stolen, he'll be able to see that, hey, this guy doesn't actually own these shoes. So this is huge, actually. If the owner that stole the shoes, for example, were to sell these shoes to this individual, because he had stolen them, the individual will acquire the shoes, but the name on the digital tag will still be of the original owner whose shoes got stolen. And of course, this may devalue that pair of sneakers. So this is huge, and actually verifying the authenticity of a product, and of course, verifying that the product actually belongs to the owner that claims that they own it. So they actually have another platform called Omni, and they're saying that this is going to be the second platform to migrate to Hedera. It has not actually migrated yet, it seems like, and it's currently being leveraged by global brands, including Senko, I'm not sure how to pronounce it, the third largest retailer in Latin America, to trace products from raw materials to finished goods and through the life cycle of product ownership. Now, this use case is something that I've seen discussed across the crypto sphere a lot, tracing products through the supply chain from raw materials to finished goods. And again, SUKU is just one application that is that's building on Hedera to enable this type of use case. There's many others, and in fact, there's many other cryptocurrencies and other chains that are trying to do this as well. But this is just an example of how Hedera has so many use cases. They're doing what everyone else is doing, and then they're doing so much more. And again, this is just one example of that. So as we expanded the capabilities and use cases for SUKU, it became clear to us that the cost of doing these transactions on Ethereum was prohibitively expensive at scale. I mentioned this earlier. After a thorough review, it became clear that the Hedera network was the only option that would be an enabler, not a roadblock in making that vision a reality. So guys, that is SUKU, the sneaker authentication and tracking service building on Hedera Hashgraph. All right, guys, on to the next use case. This one's actually quite relevant to current times. This is about using Hedera to provide for COVID-19 and STD testing, right? So this is a massive, massive use case, of course, in the current environment with COVID-19 and everything. Obviously, testing and being able to test for COVID-19 in a quick and efficient and accurate way is important. And in this article, it's to announce that this E&I Awards, it's to announce that they have actually given Safe Health Systems, which is a Hedera partner that builds dApps on Hedera, a contract to make the Safe Health Check app quickly available with preferred pricing to its member institutions across the United States. And we can see here that E&I Cooperative Services has a membership of over 5,000 educational institutions. So in this case, what they're doing is they're saying, hey, Safe Health Systems, we're going to sign a contract with you so that your app, the Safe Health Check app, can be used across our 5,000 educational institutions. And what is the Safe Health Check app running on? It's running on Hedera, right? And again, keep in mind, whenever I talk about these use cases, any transaction running on Hedera Hashgraph is using HBAR to pay fees. There's no other way to run a transaction without using HBAR. So any transactions that we're talking about in any case in this video, they're utilizing HBAR directly, all right? So E&I is helping educational institutions across the US achieve this by using the Safe Check Health app. E&I is also helping tackle the stigma and improve safety by contracting for non-COVID testing services around STDs. Super, super important use case that obviously is applicable globally. And this just shows that not only are companies like Safe Health Systems actually building on Hedera, but their products are absolutely in demand and they're being used in a very, very, very wide capacity. Guys, the next topic, the next use case that we're going to talk about, this one's actually quite interesting. It's a topic that some of you may agree or disagree with. It's a very controversial topic, but it is very significant nonetheless. So in this case, Microsoft, Epic, Mayo Clinic, again, a partner of Hedera Hashgraph, have a joint effort to accelerate digital COVID-19 vaccine records, all right? So Safe Health, again, the same partner that we just talked about, and Microsoft and Mayo Clinic, another partner of Hedera Hashgraph, have paired up to do this. The current vaccination record system does not readily support convenient access, control, and sharing of verifiable vaccination records. Consumers may soon be required to show their coronavirus vaccine status in order to fly or enter stadiums or other large venues. Health passports would facilitate this, and the coalition's work aims to help individuals obtain an encrypted digital copy of their immunization credentials to store in a digital wallet. Okay, now this is actually really interesting because the other day I was reading an article that actually talked exactly about this. I was looking up tickets to see, if things are going back to normal, tickets for concerts, and I came across an article, or it was like a ticket service that basically said that it might have been an announcement actually by the governor of California. I can't remember exactly what it was, but essentially what they said is that sports stadiums can now open up, but if they're requiring everyone to show a proof of vaccination, they could open up to, let's say, 50% capacity. But if the venue was only requiring proof of testing, for example, and not proof of vaccination, they could open up to 15% capacity. So think of it in terms of a venue that has 10,000 seats. Obviously, their goal is to make as much money as they possibly can, and they would love to open up to the biggest capacity they possibly can because, again, their bottom line is profit. So if you told them, hey, in order to open at 50%, you have to have your customers show their proof of vaccine, or else you can only open up 15%, chances are they're going to require proof of vaccination, right? Like to get in, because they want to go for that 50%. So this is a very, very real thing that we could be seeing here in the coming months. And in fact, I was thinking in my head, hey, that's kind of crazy because if I've been vaccinated, but if I wanted to go to a venue, I'd have to go find that little paper vaccination card that all of you guys have who got vaccinated, and I have to somehow find that and make sure I don't lose it and show it to them, right? So it's difficult. I don't have a digital copy of that vaccination record for me to pull up on my phone and just show them. It's got to be that little paper copy that I have right now, which I was thinking, hey, I don't even know if I have that anymore. So the point being that this is a significant development, and it's something that we definitely will need in the coming months. And Safe Health, again, is currently working with Hedera to develop this. They're working to develop a blockchain-enabled crowd safety solution using the VCI standards that they talk about in this article that are designed to help get concerts and sporting events going again. So again, another massive, massive use case where Hedera is directly involved with the creation of it. So we're going to move on to the next use case now. All right, guys. The next topic, the next use case is Project Starling, which used technology to preserve the authenticity of Capitol riot images. Essentially, technology that's being built to validate images that are shown on the internet. Of course, nowadays we have all these issues with fake images, edited images, photoshopped images that want people, the media uses them to make people think, whatever they want them to think, whether it's, one direction or the other direction, whether it's one news source or another news source. It seems like nowadays what you find on the internet oftentimes can't be believed. So this was a project that was done to see if we could fix that issue. Of course, it's a very, very important issue with the amount of fake news and everything that's been going on in the media. So this project was a collection of photos documenting 78 days in the recent U.S. presidential transition. The project uses a variety of technological solutions to verify the authenticity of the photos, including those of the Capitol riot. All right. So launching today, Project Starling is a joint effort from the University of Southern California, Shoah Foundation, and Stanford University with Reuters, another partner of Hedera. These groups collaborated with tech companies, including Adobe's Content Authenticity Initiative, ALTCOIN, and Hedera Hashgraph to create the Photographic Archive of Trust. The prototype, which combines technological solutions to verify the authenticity of images, documents the days between the 2020 election and Inauguration Day. The images have metadata that is committed to a blockchain, the blockchain alternative tech created by Hedera Hashgraph. So I guess what they're saying here is the images have metadata that's committed to a blockchain, and then they said the blockchain alternative tech, which is the DAG, created by Hedera Hashgraph, which can quickly record data in an immutable fashion. It lets anyone check the provenance of an image and access immutable information, including a timestamp, where the image is stored, and a verified edit history. The archive takes the photos from Reuters photographers and commits them to several blockchain ledgers, allowing anyone to check the provenance of the image. The archive has 250 verified photos, including unaltered photos from the day of the insurrection. So guys, this is quite important. Again, today with the issue of fake news and doctored images on the web, and it's hard to really trust what we see online nowadays. And so this was an attempt to see if we can fix that issue. People nowadays can Photoshop pretty much anything. And so this is a way to safeguard images when they're taken, prove their authenticity, prove that they haven't been edited. And again, they're using Hedera Consensus Service as well. So this is how they do it. Each image is committed to Hedera Consensus Service. Images are then uploaded and stored in Filecoin's decentralized cloud network. So they're using a collaboration or combination of various crypto technologies, of course, one including Hedera Hashgraph, and then using other things like Filecoin to blend all these things together and allow people to view the image and check its provenance using immutable information, including a timestamp, image storage data, and verified edit history. So really, really interesting use case. And again, working with Reuters, which, like I said, is a partner of Hedera Hashgraph. All right, guys, the next use case is Atma.io. And this is a use case that was created by Avery Dennison. And it's very interesting. So this is actually a massive, massive use case. As you can see, 10 billion plus items have been connected to the cloud. 50 new items are added per second, and 5,000 global factory participants. These items are essentially getting a digital tracker. So they're tracking these items and assigning them a digital, essentially, code, or essentially ID, as they say here, to everyday items. And it can be any item. And so as you can see, there are 10 billion plus items that have already been added to this system, and 50 new items are added per second. And it's created by Avery Dennison. Again, Avery Dennison is one of the governing councils of Hedera, right? So it's a platform that unlocks the power of connected products by sending unique digital IDs to everyday items, providing unparalleled end-to-end transparency by tracking, storing, and managing all the events associated with each project, all the way from source to consumer and beyond, enabling circularity. Atma.io provides a set of developer modules to authenticate devices or products, and manage their inventory and trace them throughout their lifecycle, kind of like what we talked about with SUKU's Omni app, right? Tracing a product from its creation all the way through its lifecycle. Kind of the same idea here. To enhance the Atma.io platform, the Avery Dennison team wanted to leverage Public Ledger to provide greater assurances in product tracking by adding Hedera as an optional and additional configuration to the Atma.io stack. This digital identity becomes forever immutable. So important distinction to make here. Hedera is not required on this application, right? So the application that's been created and then Avery Dennison added on Hedera as an extra layer that customers can take advantage of if they want to make this information forever immutable on the DAG, right? So Atma.io allows for products, their creation, transfer between partners, and eventual sale to be verifiably recorded on Hedera if the customer so chooses to do so, right? It's optional. The authenticity of a product can be verified through the supply chain, and secondary markets can count on exchanging authentic goods. Again, when we talked about the whole sneakers, if you buy a sneaker from Nike and then you try and sell it, right, on a secondary market, you can track that product through something like Atma.io or SUKU's apps, and make sure that the goods that you're selling to, or someone can make sure that the goods that they're buying are authentic goods. So this was the next use case. And guys, again, this is a huge use case. Again, it's not requiring Hedera Hashgraph, but it's there because Avery Dennison is partnered. Like if Avery Dennison, this is just a very clear example of how these governing council members are doing everything in their power to integrate Hedera Hashgraph with their current tech, grow the user base of Hedera Hashgraph. They're directly incentivized to do so. So you can imagine that maybe if Avery Dennison wasn't a governing council member, they might not have chosen to use Hedera Hashgraph, right? They might not have had that incentive. Maybe they didn't feel like it was necessary. But because they're partnered, they are literally integrating it with this massive platform, a use case that may not have developed or may not have been used on this platform had they not been governing council members. So this is just one major advantage that we can see about how this governing council made up of these massive companies is such a big deal for Hedera Hashgraph and for HBAR. And again, this is something that we don't see in any other crypto coin. Like no other coin has a governing council of this caliber. It's a huge distinguishing factor for HBAR and for the Hedera Hashgraph network in general. All right, guys, now we're going to move on. We're done with the use cases. That covered it. We're going to move on to the Hedera token service. I'd like to also mention, guys, I am talking pretty fast. I apologize if I'm going too quickly. Please let me know in the comments if you want me to slow down next time. I'm just doing my best to compile all this information in a quick and efficient manner because I know there's a lot of stuff that we're going through, and I know a lot of you guys are often short on time. But again, if you feel like the speed that I'm going at is too quickly, just let me know in the comments. I'll try and adjust in the next video. Anyways, let's go on to the next topic of interest, the Hedera token service. And we're going to talk about this for the next few links that I pull up. And this is actually a very massive development on Hedera since I made my last video. Probably something that I'm most excited about and everything that I've talked about today. So let's just jump right into it, guys. All right, guys, so on February 9th, Hedera Hashgraph came out and said that they are launching the Hedera token service and that it is officially live on the Hedera mainnet, all right? Over 60 initial ecosystem partners have joined us in this announcement, and they're going to be supporting and issuing tokens across decentralized finance, supply chain, payments, energy, and more. And again, we'll talk about many of those here in the coming slides. So the Hedera token service offers configuration and issuance of native, fungible, and non-fungible NFT tokens in a fast, secure, and cost-effective way. Assets tokenized with HTS deliver native programmability and configurable compliance at the account level, all without deploying slow, expensive, and potentially faulty smart contracts. So again, the point being here is that essentially think of this as being able to deploy new coins on Hedera in the same way that you can deploy new coins on the ERC system with Ethereum, okay? Minus the insane gas fees and minus the issues that Ethereum faces at the moment. Again, the initial token ecosystem is 60 plus wallets, exchange, issuers, council members, and network explorers. And of course, that's going to grow over time. This is just what they launched with. And this is a map that kind of shows all the different partners that they launched Hedera token service with. We'll again cover more of these further in the video. So again, the most important thing, low predictable fees on the Hedera public network. It costs less than 1 cent to transfer any sum of a tokenized asset. That's massive, guys. No fork guarantee. So again, this is a fee schedule, and as you can see, it's insanely cheap compared to Ethereum, and we're going to talk again more about this here in the next slide. So let's jump right into talking about the people that are building on the HTS and who they are. All right, guys. So this is again another slide here, and we're going to talk about some of the companies that are mentioned here, the ones that I'm going to be discussing here further in the video. So applications, these are applications that will be issuing tokens on HTS the same way one would issue tokens on Ethereum for their applications. And they include applications such as Calaxy, one that we're going to be discussing later in the video, Dovu, another one that we're going to be discussing in the video, Jigstack, not specifically discussed in this video, but a very interesting project that I like a lot. It's going to be actually a launchpad on Hedera, the first launchpad on Hedera, so very interesting. We'll talk about that maybe in another video down the road. SUKU, which we also talked about at the beginning of this video, and TuneFM, which is one that we're going to cover down the road as well. So DLA Piper, these are all like some of the governing council members talking about what they plan on doing with HTS. So DLA Piper, again, one of the largest law firms in the world, is beginning to integrate the Hedera token service into its Toko tokenization platform to enhance the performance, security, and scale and stability of enterprise-grade digital assets. Again, Toko is something that I covered in the first video. It's a tokenization platform, again, created by DLA Piper. Super interesting stuff. EFTPOS, we're actively looking at ways of leveraging the HTS in addition to the Hedera consensus service to implement our digital strategy. EFTPOS is the largest, I believe, debit card issuer in Australia. And so they process tons and tons of payments in Australia. For the Australians out there, you are probably very much aware of them. And they're actually going to be utilizing HTS to do micropayments. We'll probably talk about that a little bit later in the video as well. Google Cloud looks forward to supporting the growth of the Hedera ecosystem as a council member and trusted partner. Again, Google basically saying they're going to be supporting the growth of this token service and potentially building on it. Again, these are all governing council members, so each of them has an incentive to build on the token service and use Hedera's platform. IBM blockchain platform, we're going to discuss this again a little bit further in the video, so I won't talk too much about it right here. LG Electronics, another one of the governing council members. Tata Communications, a major communications company in India, I believe, saying that Hedera token service has the potential to scale across multiple use case opportunities for both our customers, ranging from payments to supply chain and tokenization of assets, each offering an opportunity that differentiates ourselves in the market. That was said by the VP of Tata Communications. And then Bittrex Global. These are going to be exchanges that are going to be partnered with HTS to launch tokens on their exchanges. So imagine if someone launches their platform or their app on Hedera, and then they want to launch their token on Hedera. These exchanges have already come forward and said, hey, we're going to support those tokens that get launched on HTS. So I can launch my token on Hedera's network, and then immediately I can probably very quickly and easily launch it on Bittrex, for example. So Bittrex Global here, one of the major exchanges that is partnered with HTS. IndoDax, the largest, I believe, exchange in Indonesia. And then OKEX, which is also a very, very massive exchange. These are all partners that are planning on supporting HTS right out of the gate. And then these right here are applications. So companies that are building applications on utilizing HTS. One being Calaxy, which we're going to talk about again later in the video, so I won't talk about it too much here. Here's another one, Dovu. Again, we'll be talking about it further in the video. And then here you go, we have Everywhere Limited, which, if you recall from my first video, is actually the company that is currently using Hedera's technology, and they had built an app for UK hospitals to track the transport of COVID vaccinations. I talked about that again in my first YouTube video. These guys are also going to be supporting HTS and utilizing it. And then again, Jigstack, the company that I just mentioned a few minutes ago. Using HTS, we can develop Lemonade, which is their app on Hedera, and be one of the first DeFi dApps on the Hedera mainnet. Lemonade, the DAO of DeFi, to not only launch token ecosystems on Hedera alongside the Ethereum network, but it will also enable its built-in affiliate marketing strategy for its consumers. I'll get into Lemonade a little bit later. It's a project that I'm really, really excited about, but I want to cover it in a separate video. So just letting you guys know, Lemonade, again, another project that's going to be building and utilizing HTS to allow for token launches on the Hedera platform. And then here's another one as well. This is another company that has a very interesting product. Runeshine Inc. is excited to deliver Hedera token service to enable a blockchain-driven auction marketplace for rare and bespoke spirits. Again, just another example of one of the various use cases and apps that can be built on HTS. And then we have SUKU, which I discussed as well. TuneFM, which I'll be discussing here shortly as well. All right, guys, so the first token that we're going to talk about that is utilizing Hedera token service is TuneFM and their Jam token. So the goal of TuneFM with their Jam token has been to tokenize streaming and allow real-time micropayments out to creators. So these guys have been with and utilizing Hedera for a long time now, before HTS even existed. And so this article talks about how prior to HTS existing, they had to use a bunch of workarounds to get their product the way that they wanted it to be. And ultimately, it was quite difficult. They managed to use some workarounds to get it to work the way that they wanted, but it wasn't until HTS came out that they were able to perfect their token and their platform. So here you go. Previously, we reached our goal through smart contracts on the Hedera smart contract service and minting the first gem ever created using Hedera-based smart contracts. And similar to the ERC20 token on Ethereum, how we talked about Ethereum and their token creation system. At the time, this was our only choice because there was no way to mint a decentralized token on Hedera without smart contracts until the HTS. So prior to HTS, Hedera was also using smart contracts to mint tokens in the same way that Ethereum currently does. It's worth briefly surveying the downsides and trade-offs with smart contracts to understand the benefits of what something like HTS provides. First off, smart contracts are inherently slow, expensive, and inefficient. Not only are their smart contracts costly to run, but they also operate a lot more slowly since they are abstracted away from the core network for blockchain. Because of this disconnect, it is an inefficient use of computing resources to run smart contract-based tokens for any high-usage, decentralized application. So this talks about how they started off with those smart contracts and then HTS got released to save us, as they say. We would no longer have to compromise our original vision and instead utilize HTS to create a native JAM token running directly on the Hedera network without smart contracts. JAM now operates with the same high fidelity as HBAR with equally low fees, a fraction of a penny per transaction, and super high throughput, 10,000 plus transactions per second. We can create our own HBAR equivalent token, but also utilize our unique token economics, distribution, and pricing models. And this is one of the things that's really cool about HTS. Essentially, when you create a token on HTS, it has all the same characteristics of HBAR, right? So HBAR, the native token for Hedera, when you create a token on HTS, is as fast as HBAR, is as secure as HBAR, and is as efficient as HBAR. One of the added benefits is automatic compatibility out of the box with exchanges that support HBAR and the latest HTS protocol. So like I said, those exchanges that we talked about earlier, Bittrex, OKEx, they're going to work natively with tokens that are created on HTS. And so when you create a token on HTS, it can immediately work out of the box with those exchanges that have decided to partner with Hedera on HTS. Listing JAM on several exchanges, more to come, we already heard about some of them, will be as simple as enabling our token without building custom integrations. Transactions worth fractions of a penny for just a few seconds of music streamed can now be processed in real time as they're created, so when the music gets played, the artist gets paid. I love that little catchphrase there. So that was TuneFM, guys. That was one of the first companies to utilize HTS to create and use their token. All right, guys, the next partner for HTS is called Power Transition. And this is a company that has an idea to allow the efficient transfer of energy. So if you have excess energy that you're creating from the solar panels on your roof and you don't need that excess energy, again, I'm not an expert on solar, I don't know how the energy gets stored, but for the sake of the example, you can sell your energy to your neighbor who might need it, right? Who is not producing enough energy himself. So that's kind of the idea with this. But Power Transition believes they have the ability to take it to the next era. They're driving to create a peer-to-peer energy trading and microgrid management platform. In short, this will start by allowing consumer homes to establish a microgrid, a local grid that can operate independently, and create a marketplace between homes in times of excess and shortage, right? So when you have excess energy, you can sell it to your neighbors, and when you're short of energy, you can buy it from your neighbors in the same way. With Hedera, Power Transition users can have a direct peer-to-peer exchange of HBARs for their energy, so they can utilize HBARs and trade between them to trade energy, right? And again, currently the platform is being tested using homes and businesses in Corby, UK before being globally accessible. So they're running a test program, kind of like a pilot, with I believe it's like 45 homes. Yeah, 45 homes in the United Kingdom. And once that pilot is complete, they plan on expanding this out, not just to residential areas, but to enterprise properties as well. So again, they're going to be utilizing HTS for this use. All right, guys, my next app that's building on HTS is actually one that I'm super, super excited about. The use case on this is genius. I wish I had thought of it because it's absolutely brilliant. And I think this is going to be big. And they're being built on Hedera, of course. But let's talk a little bit about Calaxy, which is the creator's Galaxy, created by Spencer Dinwiddie, professional NBA player. I'm going to talk a little bit about him in this article, kind of give you a brief intro into who he is. And then we're going to go into an interview with him that kind of describes the platform. And then I'm going to show you guys the platform itself. It's beautiful and it's a genius idea, right? So let's jump right into it here. So Spencer Dinwiddie, best known as the point guard for the Brooklyn Nets, right? He's a professional NBA player. When the idea of Calaxy came to him, which is a personal tokenization idea, Dinwiddie knew that people would need time to come around to the concept of human tokenization. He would have to prove to himself in the market that his plan could work. Essentially, what we thought was the most logical leap was using myself as a proof of concept, he says. Coming out, putting my assets, my contract on the blockchain in some form or fashion. So you might remember that a few months ago or maybe a year ago or so, there was an NBA player who decided to tokenize his contract. This is that player, right? Spencer Dinwiddie is a player that decided to tokenize his contract. Ultimately, it never went through because the NBA snuffed it out. But this was what he was trying to do. And he's that same player that I've talked about. If you follow me on Twitter or in any of my groups, I've talked about this project before when he did that, when he decided to tokenize his contract, right? So this is kind of related to that. So that was his idea from a couple of years ago. And it's evolved into this amazing app called Calaxy, which I'm going to talk about again in a little bit. again, what another thing in the interview that follows here, I'm going to show you guys snippets of the interview, but this guy is brilliant. Like, I don't know how else to put it. The guy knows what he's talking about. He's smart. He's intelligent. I was very impressed by the interview, which we're going to get to. These are just little snippets, but we'll look at the interview in a second. When you look at the current system of how fans can engage with their favorite influencers or favorite creators, it is a very broken top-down system where these intermediaries are taking either too much of the recognition or too much of the cut, he explains. Companies like ByteDance, Twitch, and OnlyFans earn through service fees and commission. OnlyFans, for instance, lets creators set their own subscription fees, from which the company takes a 20% cut. Such platforms act as both a marketplace and a trusted intermediary handling the transfer of money. So the idea that he's kind of conveying is that all these platforms that are run that allow creators and influencers to monetize themselves take a massive cut in between to run the program, right? So his example is OnlyFans takes a 20% cut from their creators. So there are platforms out there, but they're very centralized platforms, and the intermediaries are making a lot of money that he believes should be going to the creators. So his idea, brilliant idea, would allow users to purchase blockchain-based tokens, which can be used to redeem interactions with creators and stars on the network. So we'll get more into that in a minute here. And this is another point that he makes, which is really interesting. Money just isn't hampered by borders regarding blockchain technology. It's not friction-filled. Those things make a lot of sense to me. Why shouldn't I be able to sell 1% of my house and gain liquidity in my asset if that's what I want to do? He says this goes back to the idea of tokenizing assets, right? So like if you have a house or a car or whatever it may be, and if you wanted to take some equity out of it, right? There's a long process you have to go through to do this. If you could tokenize your house and split it into 100 tokens, right? And the value of the home, of the asset, gets split between these 100 tokens, and you can sell 1/100th of those tokens, or 1% of the equity of your home, to an interested individual as an investment. And you can immediately cash out. And so that liquidity is what he's talking about. Super, super important concept. This concept has been put into practice before. For example, Hong Kong-based startup Liquify, which happens to be the only partner to Calaxy from Asia, uses a process called securities tokenization to split the value of assets like real estate and fine art into shares, which accredited investors can purchase. So pretty much exactly the example that I just gave. The entire platform is built on Hedera Hashgraph, a decentralized public network. Hedera gave Calaxy a grant in HBAR, its own cryptocurrency, to support the development and use of the app on its network. Meanwhile, crypto exchange. Now this I highlighted because it's interesting. I don't know how factual this is. They did spell Coinbase. I guess they did spell it right, but let's just go over this real quick. Meanwhile, crypto exchange Coinbase is providing custodial services. Since Calaxy's network is based on buying and transacting with crypto tokens, Calaxy needed a secure way to store the tokens. Coinbase will be taking care of this function by holding large volumes of crypto securely, similar to a bank. All right, and the idea is here that, and this is what I seem to gather from it. I'm not sure again how correct this information is, but it seems to me like he's saying that Coinbase is going to securely store tokens that are created and minted by creators on Calaxy. Now, again, if Calaxy is in fact using Hedera and HTS to mint these tokens, that means that these tokens have all the same function and utility of HBAR. Not function and utility, sorry. These tokens share all the same characteristics of HBAR, right? Essentially, the code is the same. So if Coinbase is going to be custodying, is going to be providing custodial services for these coins, that makes me think that why would they not provide custodial services for HBAR, right? So Coinbase has their trading platforms, Coinbase and Coinbase Pro, and they also have custodial services for bigger players. And typically what we see is that they'll launch a coin on their custodial services, and soon after they'll launch it on their trading platforms. So the idea that I'm getting at here is that this could maybe indicate, again, this is all speculation, but it could indicate that Coinbase may have plans on listing HBAR down the future for their custodial services, which would indicate that they'd list it on their trading platform. And of course, we all know that it's great to have exposure on Coinbase if we're bullish on HBAR. So that's just a little tidbit that I picked up in this article that I felt like was interesting to point out. So that was the intro into Spencer. Let's go on now to the interview. All right, guys, so here's the interview. I'm going to play a few short snippets from this interview. It's not going to be the whole thing. I'm going to play a couple of minutes like I did in the intro video when we started this video. But a couple of key things. He's going to talk about the platform and why it's so exciting. And again, this is built on Hedera. So anything that's going to be big on Hedera is big for us as HBAR holders because, again, every transaction is going to be utilizing HBAR. So let's jump right into it here.
I'm giving this time for free, so I'm excited. But how much the time would Spencer cost?
Oh man, see, we're gonna see.
So is it like a marketplace then? It's like, could the time be like one price one day and then like the next day like go up like 10% and all of a sudden it costs a little bit more to spend time with you?
Yeah. So remember we talked about the phases. Like to start, we're gonna have these creator tokens kind of pegged to $1, right? So it's kind of seamless. People understand. It's gonna be very kind of static in that sense. But as we continue to go through and we, transfer from HCS to HTS and, do different things within the Hashgraph system and start turning on our dynamic token modeling, those things will be able to be traded, and they will have value that will fluctuate, and that opens up secondary market trading and speculation and more true investing. We want to kind of walk people through the phases versus maybe hitting everybody with everything all at once. So you're going to have just that kind of ability to interact with your favorite influencer first, but we will get to that dynamic token model in short order. That'll be prior to the end of the year, so it's not anything that's going to come, in 2023. Like, this is all 2021. We're going to see, us kind of walk everybody through the phases.
So guys, basically what he's talking about there was that when the platform launches, it's going to give you the opportunity to essentially buy time or purchase tokens for your favorite creator, whether that be an influencer or a professional athlete or an actor. For example, you could get on a phone call with a famous investor, right? Or you could get on a phone call with LeBron James, or LeBron James can FaceTime you for 10 minutes, and maybe he'll charge $20 for 10 minutes of FaceTime. Obviously, probably not. Probably a lot more than that if it's LeBron James that we're talking about. But the idea being that you can buy these tokens that are pegged to the dollar that are exclusive to each creator who can release them. And then that creator can offer services that can be purchased with those tokens. And again, this is all being run on Hedera Hashgraph. So let's continue on in the interview. All right, so this next little part of the interview, it's about 3 minutes long. And I'm playing it for two reasons. One, because it refers to Hedera Hashgraph. But second, because what he's saying here is really, really smart. It's really, really interesting, and it's really, really brilliant. And it kind of gives you an insight into the mind of this guy who's creating this application, and why I'm also very bullish on this application. I obviously can't invest in it, but it just kind of shows his brilliance and his way of thinking. And I think what he's about to say here is something that is super valuable, and everyone should pay attention to it and try and think about these things, because they're very, very important when it comes to investing. And here in crypto, of course, that's what we're doing. So listen to what he's going to say here, and then we'll talk a little bit more. Again, it's about a three-minute clip, but I highly recommend you guys listen through it.
They wouldn't do it. You know what I mean? Like, that's the way this thing works.
Percent.
There you go. And so you got to remember, like, the reason the team owners, right, pay out in the manner that they do is because they're making interest, they're investing their money. Like, if it was a situation where it wasn't beneficial to them, they wouldn't do it. You know what I mean? Like, that's the way this thing works. But you also have to start to understand capital the way that they do, right? So, hey, if I can extract capital or extract liquidity out of a typically illiquid asset, like, and because of who I am as an accredited investor and with the way the laws work, I have access to deal flow that,
Okay, real briefly, what he's talking about here is with the contracts that these professional NBA players get paid. This is something that he tried to tokenize his contract. So basically, what he's saying is, if I can extract value out of that contract, earlier than it should be, then I should, like, if I'm getting paid in 2 weeks and I can extract value to the contract 2 weeks prior, I can utilize that money to invest it in other places. That's kind of what he's getting at here, and I can maybe sell that tokenized version of the contract to a non-accredited investor who doesn't have access to investments that I have access to, but who can make money off of investing in my contract. Maybe he gets paid 4% interest, is what he's saying, right? So for an average investor, 4 to 5% interest, someone who's not involved with the crypto space and who's investing in safe assets, a 4 to 5% return is pretty decent, right? While for him, he'd be able to extract extra liquidity out of his contract and utilize that money to invest in things that accredited investors like himself can invest in. So we'll continue.
Normal people can't have. So for normal people, 4% might be cool. And I can say, hey, look, take the 4% on my contract, especially if it's interest only. But now when I accrue this value early, I can get into this is a bad example, right? But because of the Uber IPO didn't do great, but just because on the top of my mind, an Uber IPO, you know what I mean? Or I can invest in, Dapper Labs. Coinbase IPO. There you go. Like, you're going to be able to get into all these different things, whether it be relationships or whatever, because you're an accredited investor. And now you have extra capital to play with. And once again, full disclaimer, like, have a good team of people around you. I'm not saying make all these decisions on your own. Definitely don't do that. But provided you do have a good team, which is the goal of everybody, right? Even if you just had a normal NBA contract and wasn't doing anything fun, you would want good financial advisors, good sound advice. Well, have them explain to you cost of capital. Have them explain to you inflation. Have them explain to you time value of money. You know what I mean? And the ability to get money up front and interest-only payments and the ability to, double up and beat the spread. And if they sit there and tell you that, they can't do it, or, it doesn't make any sense or whatever, then they're probably not good, at what they do. You know what I mean? At the end of the day, because let's be real here, the more money they have under management, the more money they make. They should be able to do this too. because if they're managing $20 million of your dollars versus $12 million of your dollars and they charge you 1%, it's a no-brainer. Like, all incentives are aligned in this situation. So that's why it's a situation where, like, I feel very bullish on its prospects, because we have a chance to help the fans, right? Typically non-accredited investors make, a couple points that they may not have normally made, and in a safe manner. They get to speculate, have fun on their favorite player. The athlete himself gets a chance to have massive wealth creation. And even the financial advisors, or the people on the team that typically would steer you away because their incentives aren't aligned, well, they're aligned too, because now they can make more money. They're now getting 1% on 20 million instead of 10 or 12.
I agree.
So again, just like I said, the idea here is that this app is so applicable in so many ways. There's an advantage for big players, big influencers, big personalities to get involved in this thing, right? Because if they can utilize, their influence, or if they can utilize their popularity to monetize it, they can use that money to invest and grow their wealth. And at the same time, individual investors, such as non-accredited investors, can invest as well in a fun way in their favorite creators, right? So that's kind of the idea that he's painting here, and it makes a lot of sense. And like you said, all incentives are aligned. So the idea here is a brilliant one. So let's go ahead and move on, guys, to the actual website, the actual platform. It looks really nice, guys. So this is Calaxy, guys. This is the homepage. Again, it's in beta right now, but they have a lot of partners that they've already signed up to launch. There's Spencer himself. I believe she's like a famous fitness Instagram model. That's the guy from The Bachelor. This is another famous player, and then these are artists as well. So the idea here, video call, right? You can book a video call with your favorite artist, or you can DM your favorite artist, right? Open a one-to-one chat with me. Buy his tokens, buy Spencer's tokens, and then spend them on opening up a chat with him, for example. You can vote on big decisions. So from what shoe to wear on the court in tonight's big game to what song they write next, have your say by voting on decisions posted by creators. This is this is brilliant, guys. So this is the website, and I think it's just absolutely brilliant. You find the creators you love, you buy their tokens, you can unlock special perks. A great way to get in touch with people that you want to get in touch with that you may otherwise not have a chance to do so. Right, so this is, again, a new platform being launched, and I think this thing can be big, right? Because the appeal is to the masses in a grand scope. We have influencers from all different industries that will probably be on this platform, and of course, again, the audience appeal here is massive. And again, every transaction using HTS, running on Hedera, using HBARs to pay fees. So that's the big picture. Let's move on to the next topic. All right, guys, so the next platform that is going to be using HTS is called Dovu, all right? So Dovu, and this is one that I mentioned earlier in the video. Dovu, which is partially owned by Jaguar Land Rover, is a tokenized data economy for DeFi carbon offsetting. Landowners who've implemented carbon sequestration practices can tokenize their land and make it easy for businesses and individuals to offset their carbon footprint through its decentralized marketplace. What are they talking about? All right, first of all, if you guys are familiar, many of you may not be familiar with how this stuff works, but basically the idea here is that businesses in a lot of countries have requirements to essentially, like some of them have requirements and then want to do it for ethical reasons or whatever the reason may be. But often they have requirements where their carbon emissions or carbon footprint has to be below a certain level, right? So if you are producing, let's just, to make things simple, 6 blocks of carbon emissions, right? If you're producing 6 blocks of carbon emissions, maybe your government's required you now, hey, you can only produce 3 blocks, or your carbon footprint can only be 3 blocks of carbon emissions. You have to find some way to offset those excess 3 blocks of carbon emissions. Now, what you can do is landowners, right, who've implemented carbon sequestration practices. So if you own some land, you can build stuff on that land that is carbon negative or carbon emission negative, something that reduces carbon emissions, like planting trees, for example. And then you can sell that land, or you can sell amounts of that decarbonization to these companies that need to offset their carbonization. So again, that company that was producing 6 blocks of carbon can only produce 3 blocks. So he buys 3 blocks worth of carbon savings from Joe, who owns a farm that grows trees that reduces carbon, right? So that's kind of the idea behind this process that happens, right now. Now, what Dovu is trying to do is trying to make that process a lot more easy and a lot more simple, because right now it's not very easy to do. So countries, corporations, or even individuals can issue, buy, and sell carbon credits, which represent carbon dioxide's removal, capture, or sequestration through long-term projects. There exist many challenges when it comes to the issuance and exchange of carbon credits today. For one, there's no easy way to trust whether a plot of land or a forest of carbon-reducing trees has been sold 100 times over, otherwise known as a double spend problem. DLTs have the potential to reduce or completely eliminate the challenges outlined above through the use of tokenization and the hashing of important documents and details of a carbon offsetting project. Dovu chose Hedera, right? Utilizing the HTS to reduce the complexity and cost of tokenizing carbon offsetting projects of landowners and sustainability project managers. The cost of tokenizing land, for example, as an NFT is $1 paid in HBAR on the public Hedera network and less than 1 penny to transfer. In comparison, gas fees to Ethereum cost $80 to $100 today to pay in ETH for minting a non-fungible token, with pricing that fluctuates depending on current network usage and the price of ETH that's potentially 99 times more expensive than doing the same thing on Hedera. This ensures a fair marketplace that handles bids and asks. So Dovu also found confidence in Hedera through its fair consensus timestamps and ordering of transactions. This ensures a fair marketplace that handles bids and asks based on the order in which trades are submitted, not the amount of gas paid by marketplace participants. Anyone who's used Uniswap or any of those DEXs that utilizes Ethereum is already familiar with this idea. You pay low gas fees, you get put in the back of the line. You pay high gas fees, you get put in the front of the line. And so they use Hedera's consensus service to avoid that by timestamping and ordering these transactions in the order that they come in, rather than based on how much gas is paid. So landowners, companies, nations, and even individuals can use Dovu, powered by Hedera Hashgraph, to issue and exchange carbon credits in real time to support the reduction of their carbon footprint. So that was Dovu, guys. Again, partially owned by Jaguar Land Rover and runs on Hedera Hashgraph. All right, guys, so we covered a lot of stuff about Hedera Token Service. Before Hedera Token Service was actually launched, they had this hackathon. So Hedera had this hackathon called Hello Tokenization, or Hedera 21, in an effort to develop all these use cases for Hedera, the Hedera Token Service, for when it launches. So we're going to go over two of those use cases here, two very unique use cases. Brilliant ideas. I love what these guys have done, and these guys were winners in that hackathon. Again, this is utilizing Hedera Token Service, but these are examples of real-world applications created by individuals, right? No longer big companies, but individuals that actually use HTS to create value. So here's one of them. I'm just going to play this video. Really interesting. I'm going to play it from the beginning. It's about 3 minutes and 49 seconds long. But I think it's a really interesting concept here that you're going to want to see. So I'm going to go ahead and play it right now.
Hi everyone, my name is Ken Makashima. In the last 24 hours, I built Gossip Squirrel, which is a system processes library to create internet speakeasies and tradable SaaS built on Hedera Hashgraph and utilizing HTS. So before we delve into the details, I kind of just want to demo it itself. As you can see, we have two different browser instances being served the exact same domain, but being served different content. And how this is happening is because we're reading from the Hedera extension.
All right, so quick note, guys. What he's trying to show you guys here is that we're pointing to the same web address here, right? It's exactly the same, copy-paste. But one is showing something else, and the other screen is showing something different, right? So he's going to talk about that here in a second. Why are we seeing two different pages on the same exact domain?
Here, your account IDs, to check if you have the appropriate amount of tokens to view the page. So while it's the same exact domain, you're being served different content based on your amount of tokens you own. And that's kind of creates this identity service built on HTS. So let's dive into it. So Gossip Squirrel. Again, internet speakeasies, tradable SaaS. So it is websites hidden in plain sight, kind of like a speakeasy. HTS-based authorization system that serves as an identifier. What happens is that on website load, the content served is based off the amount of HTS tokens that you own in your Hedera account. Essentially what it does, it creates digital speakeasies hiding websites within the same domain. But the big commercial play is disrupting SaaS. While speakeasies are cool, this is how we're going to make money. HTS tokens map to SaaS account subscriptions. The Gossip Squirrel system maintains that these only holders of these tokens can use the services and can be further mapped to user role management as well as user management, IAM. This allows users to purchase SaaS subscriptions and freely trade these subscriptions through HTS tokens with each other.
All right, so this is actually absolutely brilliant, right? So what he's done is he's basically explaining that this can allow for the trading of subscription services, for example. Let's say you have a subscription to Netflix, right? You're paying $15 a month to subscribe to Netflix, right? So if you feel like, or let's put it this way, it's a year-long subscription, right? Netflix switches from a monthly service to a year-long service. Now instead of paying $15 a month for Netflix, you have to pay $250 a year for Netflix, right? Now you have to pay $250 a year for Netflix. In ordinary circumstances, you would purchase this subscription to Netflix, and maybe 6 months down the road, you decide you don't want to use it anymore. Well, too bad. You already paid your $250 up front, and you can't transfer ownership of that service. What he's saying now is that imagine if Netflix actually issued you, 1,000 Netflix tokens when you purchase the subscription. And as long as you hold those Netflix tokens, you can go to Netflix.com and you can get access to their services, because Netflix.com reads through your account, which is connected to Hedera, and tells the service that you are holding 1,000 Netflix tokens. This entitles you to access to the platform. So you go to Netflix.com and you have 1,000 tokens in your account, 1,000 Netflix tokens, and you can use Netflix. And then let's say 3 months have passed, you've paid $250 for the subscription, and now you no longer want to use Netflix. You don't need it anymore. Well, now you can actually sell those tokens, those 1,000 tokens, to your buddy, right? And you can say, hey, buddy, I've used 3 months of Netflix. I have 9 months left on my subscription. Would you like to buy the 9 months of Netflix from me for $150? Right? So your buddy's thinking, okay, well, cool. I can buy 9 months for $150. I save off the yearly fee. How do I do it? Well, here you go. You send him the 1,000 tokens, the Netflix tokens. They go into his account. You get the money from him. And now all of a sudden, when he goes to Netflix.com, he gets the services. And when you go to Netflix.com, it says, hey, you need to buy a subscription. So that's kind of what the idea is here. And it's absolutely brilliant. I mean, think of it from both perspectives. It's great from a user perspective because now you have the flexibility to maybe you were hesitant to purchase Netflix for $250 a year because you figured you're not going to use it that much. You only want it for 2 months. Well, now you don't need to hesitate because now you can buy it for $250 a month, and after you're done with it, you can resell it on an open market. In the same way for Netflix, maybe they're losing clients because of that yearly subscription. Maybe they're losing clients like you who doesn't want to spend 12 months worth of money on Netflix, but now they can sell that license to you and you would buy it because you have the ability to transfer the ownership. So it benefits both the seller and the buyer. Netflix sells one additional license that they may not have sold, and you also get to partake in Netflix for however long you want. Brilliant idea. Excellent idea, guys. We're going to move on now to the next project that I also thought was really brilliant, that also won, I think, second place in one section of the hackathon. Hey, guys, so the next hackathon winner is called Estate Up. These guys won second place in Google's challenge of the hackathon. And basically, it's a Hedera-powered digital will solution. So wills, estates, and testaments are stressful, burdensome, and paper-based. In fact, this manual and antiquated industry is worth $1.27 billion in the UK alone. Imagine the size of the global market. A probate's lawyer charges a percentage based on the size of a property they're redistributing in a will, which can cost $30,000 or more. Wills are stored physically on paper, whether it be at the owner's house or bank. If a will document goes missing, all that was recorded in it goes void. Hedera is the perfect solution to store the contents of the will in its entirety on-chain, whilst maintaining the integrity of the document. Upon the death of a loved one, you need proof that a loved one who has passed away designated you to have access to their bank account. The problem is this is a lengthy process for just one service, one bank account, whereas people are signing up to hundreds in their life, social media, insurance, the list goes on. So when someone passes away, you have these paper wills that are, they're on paper. So if the will gets destroyed, that the will is void. And so it causes a lot of issues for someone when it's already hard enough having, a loved one pass away, and then you have to deal with these will issues, and then for every bank, every account that they have, you have to somehow prove that you are the designated person to get access to those funds, and it's a very complicated and tedious process. So this industry is very manual and paper-based. Documents, wills, and testaments are stored physically. This industry is ripe for disruption, and Hedera is the perfect protocol to build a scalable solution on. So this guy created a solution that creates a digital will in Hedera that allows people to redistribute these digital assets with their loved ones after they've passed away on Hedera token service. So in this example, he's used cow tokens. So imagine a farmer that has 20 cows, right? And the farmer passes away, and his 20 cows need to go to his children, right? So in this app, he's created cow tokens. Let's say he creates 20 cow tokens, one for each cow. He can then go ahead and allocate these cow tokens to the surviving members of his family. So maybe Bob gets 5 cow tokens, Bill gets 5 cow tokens, Jenny gets 5 cow tokens, and Lisa gets 5 cow tokens, right? So he puts this information in on the website and says, okay, I'm creating tokens for my cows. And you can do this by anything, right? You can do this for artwork, you can do this for vehicles, you can do this for bottles of wine. So he can literally tokenize all of his assets, including his estate, and then divide those tokens up amongst the beneficiaries in a very simple, straightforward way. Again, this is all recorded on Hedera on the blockchain, or on the DAG, I should say. And so it's immutable, it can't be changed, it can't be edited, and it's his will, and it's stored digitally, so we don't have to worry about a paper will, burning up or getting destroyed. So he creates this token, right, that's automatically distributed at the execution of the will. Estate Up will automatically distribute the cow tokens to each of the beneficiaries. No more disputes about who owns what. Upon the realization of how seamless and affordable it was to recover the legacy, all of those beneficiaries go and create their own digital legacies. They create their own digital wills. So the farmer passes away, his 20 cow coins go to his 4 children. Each of them gets the cow tokens, which are redeemable for the cows, essentially. And when they realize how simple it is, they decide, hey, we should probably create digital wills as well. And then they go on and they create their digital wills using the same service, and this kickstarts a viral effect to onboard people onto the Hedera ecosystem. Again, an incredible use case. I mean, this use case, frankly, it's something that everyone will pretty much need at some point in time, and it's solving a problem. It's creating a digital will that isn't susceptible to all the issues that paper wills have, and is immutable, and there's not going to be disputes about who owns what because it's all written beforehand. So this was the second application that was, again, created using Hedera token service in the hackathon. They won second place. Excellent idea. Let's move on, guys, to the next section of our video. This is going to talk about the new governing council members, the 2 new members that have been introduced since I last made the first video on Hedera. All right, guys, so the first council member that was unveiled recently is called Standard Bank, all right? Standard Bank Group establishes Africa's first Hedera network node. This is the first network node of Hedera that is on Africa, or in Africa. And right here, Standard Bank Group is the largest African bank by assets, and they've partnered with Hedera Hashgraph and joined the Hedera Governing Council. So lots of information here, but the important thing, again, is that this is a massive company. Like, this is a massive enterprise, right? So it's the largest African bank by assets, right? And has a footprint across 20 African countries. To gauge the scale of this enterprise, they have more than 53,000 employees, right? 1,200 branches and over 9,000 ATMs on the African continent. And their earnings for 2018 were about $2.1 billion US dollars. Total assets were about $148 billion, and their market capitalization was $20 billion, all right? So this is a major bank in Africa, the largest bank in Africa, and they've now partnered with Hedera as well. Again, the first network node running in this part of the world through Standard Bank. Let's move on to the next governing council member as well. All right, guys, here is the next governing council member that was announced soon after Standard Bank was announced. French utility giant EDF pursues carbon neutrality as Hedera node operator. EDF, which is among the top 5 global utility firms, represents the first from its industry to join the council and will use the technology as part of its aim to achieve carbon neutrality by 2050. Dovu said EDF would leverage tokenization on Hedera, the Hedera token service, to create a carbon offset and credit system in line with the company's goal of cutting CO2 emissions. This is similar to what Dovu is doing, right? They're also creating a carbon offset and credit system, except this is, I think this is a much larger entity, being the 5th largest utility in the world, right? So this is the second major governing council member that was announced. So we have 2 new governing council members, one in France and one in Africa. Let's move on next, guys. We're coming to the end of the video. I want to talk about a few different things now. We're going to talk a little bit about IBM and their partnership with Hedera, and then we're going to go into some very interesting stuff. You guys don't want to miss it, so stay tuned. All right, guys, so next we're going to talk about IBM's partnership with Hedera, how they're kind of joining forces to solve a lot of issues that enterprises are facing. So IBM actually has their own blockchain platform, and in this article, they're talking about how they paired up with Hedera to solve issues, right? So permission networks forming private ledgers are a great way to securely share information between a set of known and participating entities. We're talking about, again, private ledgers. These are private systems, right? To enhance the integrity and extend its auditability outside of the network operators, private ledgers can work alongside a public ledger, which is what Hedera is. This hybrid architecture takes advantage of a more decentralized network while still preserving the privacy of its participants and their transactions. So basically what's going on here is IBM has a private network that can be used within companies for their own uses. Think of JP Morgan and their JP Morgan coin and their own blockchain that they use for JP Morgan, right? So JP Morgan coin can't be purchased off of public markets because it's part of a private blockchain, right? So in the same way, IBM has their own private blockchain, but now they've realized that if they combine their private blockchain with Hedera's public ledger, this hybrid model can take advantage again of a decentralized network while still keeping the privacy aspect of a private ledger together, right? So A leader in permission networks, original co-author of the Hedera Consensus Service white paper, and current Hedera Governing Council member IBM, wants to formalize this model, right? With its high throughput and predictable low fees, the Hedera Consensus Service makes its hybrid model viable for enterprises. Businesses like Standard Bank, again, the new Governing Council member, and Hala Systems are actively deploying hybrid blockchain networks, as discussed in IBM's recent talk. At Standard Bank, now this is really important, guys. Standard Bank, again, we just talked about them. It's the largest bank in Africa. This paragraph is huge, all right? Look what's happening here. At Standard Bank, another Hedera Governing Council member, interoperability between blockchains is critical to their strategy, okay? This approach has helped Standard Bank move proof of concept initiatives forward, such as introducing a stablecoin or central bank digital currency to be used across Africa's local banks. What's happening here is they're basically telling us that Standard Bank is currently testing proof of concept initiatives to launch a CBDC to be used in Africa, right? For all of Africa's local banks. This is huge. CBDCs, guys, essentially a nation's sovereign currency, but a digital version of it. So think of like the digital US dollar issued by the US government, or in China, the digital currency that they've released, right? So these are government-backed, right? Centralized currencies that are backed by the governments, but they're digital. So again, if you can imagine if a country is launching their currency as a digital version and it's being launched on Hedera for Hala Systems, again, this is one of the startups that I talked about in my first YouTube video on Hedera. And again, it's the startup that's tracking missile strikes in countries, right? And I believe in Syria, tracking missile strikes and storing that data on the Hedera ledger, right? So in this case, it says they're using the permission private IBM blockchain platform because the information that they're working with is highly sensitive data. And so for privacy concerns, they're not using a public ledger. However, they are leveraging Hedera as well, right? And they're sending some of that data to the public ledger so that if lawyers, or as I say here, like lawyers and journalists or other parties want to verify the information that's on the private ledger, they can do so by accessing that same set of information on the public ledger, which is on Hedera, to check the record of these events and confirm that they are legitimate and have not been manipulated. So in this case, they're using IBM's private blockchain platform. However, they're also using Hedera's public blockchain platform, or DLT platform, to make a copy of the data for public entities that want to get access to this information while still maintaining the privacy of the IBM blockchain platform. So this kind of sums it up. Hedera's role in these architectures is simple. With Hedera Consensus Service, Hedera is providing an immutable, decentralized, and ordered log of every transaction. Enterprises, regulators, and end users can be more comfortable about their privacy while still enabling the decentralized trust required for their application. IBM Blockchain Platform and Hedera are blending the world of private and public ledgers. So guys, that wraps up the information here on IBM and Hedera. Let's move on to taking a look at transaction analytics. All right, guys, so this you'll remember from my last video on HBAR, talks about or shows us details about transactions that are running through the nodes on Hedera, right? So a few months ago, I believe when I launched my last video, it was January, right? And I remember saying that in January, we were surpassing December's transactions by a huge amount. We almost doubled it. Guys, look at the progress we've made since my last video, right? So January was massive. We almost doubled December's transactions at 115 million transactions. February blew that out of the water at nearly 160 million transactions. And March blew that out of the water at 207 million transactions per month, all right? In a second, we're going to take a look at this in perspective and compare it to other blockchains in a second. And not only that, but these transactions, as we've seen from both this video and the last, are being pushed through as for valid use cases. These are not ghost transactions. These are legitimate transactions being done with legitimate entities and legitimate enterprises building use cases on the network, all right? Let's go ahead and take a look at how Hedera now stacks up against the top 10 cryptos. All right, so this is a tweet from HBAR Research here on Twitter. Give him a follow. Really, really great information. So this shows the transactions per day of the top 10 coins in the cryptocurrency market against HBAR in millions, right? Bitcoin at 0.32 million transactions, Ethereum at 1.3 million, BNB at 3.2 million, Cardano at not even 1 million, not even a tenth of a million, DOT at not even a tenth of a million, XRP at 1.2 million, Uni at a fifth of a million, Theta at close to a tenth of a million, LTC at a tenth of a million, totaling, if you add these all together, totaling 6.5 million. Again, USDT is blank, but totaling 6.5 million. Hedera, HBAR, on its own, 6.56 million transactions per day, right? Hedera, on its own, is beating out the top 10 cryptocurrencies by market cap in terms of transactions per day right now. And guess where Hedera is ranked right now? I think it's somewhere it's below 50. I think it's like between 50 to 70, or maybe just past 50. It might be above 50 now. But anyways, it's way, way undervalued right now, guys. At 30 cents, I mean, when I made my last video, it was at 5 cents, and it was undervalued. It's now at 30 cents, and it's still tremendously undervalued. I have no doubt, as I said in my last video, that HBAR will be a top 10 cryptocurrency, and judging by the way this looks, I would not be surprised if it becomes a top 10 cryptocurrency. I mean, you can just see this. I mean, this is not going to last. It's definitely undervalued. People are going to take notice. Right now, the community is very small because it's a relatively unknown project. They don't spend money on hype and marketing. But guys, this is not going to last. It's an excellent value right now for the price of the token, and as you can see, it's absolutely blowing away the top 10 coins right now as it stands. All right, guys, now we're going to talk about price and technicals. I know a lot of you guys, I'm a technical analyst, I'm a chartist, I'm a trader, so this is my bread and butter, really. So I know a lot of you guys have been waiting for this. Let's talk about HBAR and why I still think there's a lot of room to move up, why I do think it's quite undervalued. Let's take a look at the charts real quick, all right? So first of all, I'm going to go to this tweet. I tweeted this on April 4th, so it's been about a week or so since I tweeted it. But I made a comparison between HBAR right now and another coin called WRX. It's another coin that I hold, another coin that I'm bullish on. But WRX made a massive move over the last week. And HBAR is basically following it pretty much, to the T. And so here's the comparison that I made. And this is why I'm very, very bullish on HBAR right now. Why I think even at 30 cents, it's a steal of a deal. And why I do think we're going to see $1 to $2 a lot sooner than most are expecting here, right? Let's take a look at WRX first. This is the chart. And you can see here that WRX, started here, had a 308-day consolidation, sideways action, right? And I always say consolidation precedes expansion. The longer the consolidation, the greater the expansion. After that, we broke out, okay? We cleared the highs. This is the high denoted by the dotted red line. From there, we made a running flat correction, right? If you guys are familiar with Elliott wave, you'll understand what that is. If not, just understand that it's a corrective structure that precedes an impulse, right? We made a corrective running flat, and then we impulsed to the upside. And we went from the highs of 23 cents after breaking this high, and we hit $6, all right? 23 cents to $6 is a 30x increase. A 30x increase, and this happened in, I think, about 2 to 3 weeks, right? Less than a month, okay? 28% gain, 28 to 30x increase from the prior all-time high. Let's take a look at the HBAR chart next. All right, guys, this is the HBAR chart, okay? HBAR chart, similar situation. We impulsed up. We had a 322-day consolidation. WRX had a 308-day consolidation. Okay, we broke out. We retested the old highs. We made a same running flat, and then we impulsed to the upside. Okay, the highs here were at 8 cents. So far, we're at 30 cents. That means we've gone up 4x. Okay, off the highs. I don't think we're done yet. Okay, remember WRX went up nearly 30x. Okay, I do think that we're in the middle of a move up here, and we're going to go a lot higher here after we finish this consolidation at 30 cents. I bought a boatload here at 30 cents. I'm in a leverage trade, so I had spot since 3 cents, but now I've opened a leverage trade here at around 30 cents, expecting a lot higher in the coming days. While these charts look very similar, there is one distinction that's very important, and that is that WRX was a much smaller market cap coin when it made that move, whereas HBAR is a little bit of a higher market cap coin. But basically, HBAR was a bigger market cap before this move, so there's a chance that it won't be as volatile, which means we may not see a 30x off of 8 cents. A 30x will put us at $2.40 right away. I think eventually we're going to make it at $2 to $5, but for now, I do think that this move isn't quite done yet, right? We had an impulse here, a 5-wave impulse. The way I see it is we have a 1 wave, a 2 wave, and we're working on the major third to the upside. And I think that's going to take us above $1 because thus far we just have one subwave of the third. This was the second subwave of the third. We still have the third, the fourth, and the fifth to go. So I think we're going to see a lot more upside here, guys. I don't think we're anywhere near done. Very, very bullish on HBAR at 30 cents. I think it's a steal of a deal, still extremely undervalued. That is the price analysis, the comparison here. Let's take a look at the current chart today, and I'll talk about the wave count, on a more low time frame level. All right, guys, so here is the chart, and this is the lower time frame subwave count. And so basically what I'm looking at here is we have one impulse, we have a second wave, okay? I'm going to go down to the lower time frames. We're working on our major third. That's where I think we're at. So we had a 1, a 2. I'm looking at this blue 3 here, and that's what I think we're working on at the moment. I think we still have a ways to go. But basically, we have a subwave 1 up here. We have a subwave 2, that running flat that we saw. And we just got either the subwave 3 of the third, okay? Or this is the first subwave of the third subwave of the third. In other words, We could go up like this to finish the third. 1, 2, 3, 4, 5 to finish the third. Sorry, let me actually clean this up a little bit. Okay, so this is the first option. 1, 2, 3, 4, 5 to finish this third wave, the blue third. Then we get a blue fourth, then we get a blue fifth, okay? And that's gonna take us, this is log scale, so don't take these targets literally according to price here. Just keep in mind I'm targeting $2 to $5, and I think this third wave is gonna take us above $1, right? So third, first, second, third, we have our fourth right here that we're working on right now. I think we're gonna get a fifth up. Then I think we're going to go sideways for the major fourth, and then we're going to get a fifth. And that's going to complete, okay, that's not going to complete the cycle. That's only going to be the third wave, the major third, okay? Then we have the major fourth, then we have the major fifth, and that's going to be the leg that I think will take us to the higher targets, you know, $5 plus. So that's the technical analysis. In other words, we're in the middle of a massive impulse, okay? We're nowhere close to done. I've loaded up here because it's a very key level on the higher time frames. We have lots of support in the 25 to 30 cent region. So I bought up right here, and you can see we're basing out. And I do think we're going to shoot up fairly soon. Let's now take a look at, you know, a modified price prediction. In my last YouTube video on HBAR, I mentioned $2 to $5 being my target, okay? And I explained the rationale behind that. But I want to show you guys something else and explain to you guys why that was a very conservative target. All right, guys, so what I want to take a look at next is why I think that I'm going to make an argument now for why $2 to $5 is quite conservative. I'm going to explain to you guys another perspective that I didn't talk about in the last video about why 2 to 5, when I say 2 to 5, I really mean that's the bare minimum that I'm expecting here and why it could go a lot higher, right? So what I've done here is I've taken a look at the Brave New Coin Liquid Index. It shows Bitcoin's price history since inception, and I've basically marked off the peaks of each bull market, the peaks before we saw major corrections, right? The first one occurred in 2011. There's not much data there. The next one occurred in 2013. The last one occurred in 2017. And we're going to take a look at historical snapshots of price data of market cap of coins, the top 10 coins during these times. So the market cap of the top 10 coins during the peak of the 2013 bubble, and the market cap of the top 10 coins during the peak of the 2017 bubble. So let's start with the 2013 bubble and take a look at what the top 10 coins looked like at that time. So here's a historical snapshot. This is a snapshot of the coins January 2014, right at the end of the bull market. We can see that Bitcoin had a market cap of around 11 billion. Next in line was Litecoin at 659 million, XRP at 200 million, and Ethereum wasn't even on here. Yeah, because I think Ethereum, I don't know if Ethereum was, where is Ethereum? That is strange. Okay, I'm not sure where Ethereum is. I don't know if it was, maybe it wasn't created back then. I'm not sure. But anyways, guys, so yeah, 2014, you can see that the market cap of the top 10 coins ranged from 11 billion to a low of 18 million, okay? 18 million, 20 million, 25 million, 60 million. There's only a few, top 5 that were above 100 million, all right? Let's take a look at how this changed in 2017. All right, here's a snapshot in 2017, and now you can see that the top 10 coins, even the lowest of the top 10, has a market cap of 11 billion. A reminder, in 2013, Bitcoin had a market cap of 11 billion. In 2017, the lowest of the top 10 had a market cap of 11 billion. All right, so then we had 12 billion, 13 billion, 15 billion, 16 billion, 26 billion, 50 billion. Here comes Ethereum at 110 billion, XRP at 130 billion at the peak, and Bitcoin at 276 billion. Bitcoin did go higher than this, but again, alts peaked after. So this snapshot is of the alt peak, not of Bitcoin's peak. Point being that the market cap of these coins from one cycle to the next increased dramatically, right? Almost tenfold, right? We had coins that were about 100 million, right? 100 million in the top 10 as market cap, and now the lowest is 10 billion, right? So they increased by a lot from market cycle to market cycle, right? Again, XRP hit a 130 billion market cap with a circulating supply of 38 billion XRP. The point that I want to make here is that what we can expect is that at the end of this market cycle, right, at the end of this bubble, the market cap of the top 10 coins is likely going to be probably, the lowest is probably going to be at 100 billion, right? It's going to be a lot bigger than it was back here in the prior market cycle because there's more money coming in. Every cycle that happens, there's more money flowing into these markets. There's more exposure to the coins in these markets. And so the top 10 of every cycle get bigger and bigger and bigger by market cap. Not only is supply increasing across all these coins as they age, but again, more money is flowing in, right? So what was maybe incredible to see in 2017, coin being in the top 10 with 100 billion market cap, right? Not being Bitcoin, of course. This might have been incredible in 2017 and something that we wouldn't have expected. But in the current bubble, I suspect that we probably see all the top 10 be over 100 billion, right? I think that 47 billion, 20 billion, 16 billion, these are numbers of the last bull cycle. think that the current bull cycle, we're going to see top 10 be 100 billion plus, okay? What that means is that coins like HBAR, if they manage to get to the top 10, will have a market cap that's very great. And based on the circulating supply of a coin like HBAR, that could put it at $10 plus, right? Let's give you guys an example. HBAR, if HBAR were to hit 130 billion market cap, okay, with the current circulating supply, which is around 8 billion, that puts us at a price of 130 divided by 8, which gives us a price of $16 per coin, okay? So if in this bull cycle, HBAR was to hit the market cap that XRP did in the last bull cycle of 130 billion, with the current circulating supply of HBARs being around 8 billion, a fraction of what was what XRP was, that would put the price per HBAR of $16. Okay, I'm not saying that HBAR is going to hit on 30 billion. I'm just saying that if it were to replicate this and hit 100 billion plus, that $2 to $5 target that I gave you guys is really very conservative. Okay, and like I said, I have no doubt that HBAR will be a top 20 coin, even a top 10 coin in a matter of time. Whether that happens in this bull run or in the next is yet to be determined. But I think that there's a very good shot that it makes it the top 20 in this bull run and possibly the top 10. And if we're saying logically, reasonably, that maybe the top 10 in this bull cycle will all be 100 billion plus, with of course coins like Ethereum being $1 trillion potentially in market cap, right? Then at 100 billion, again, that puts HBAR, let's say HBAR hits 100 billion market cap, that puts HBAR with an 8 billion circulating supply at a price of $12.50, okay? So my point is that the targets of 2 to 5 are very conservative. I'm aiming for that as a very reasonable target to be met, but do not be surprised if we break those targets. Do not be surprised if we push past $5. It's very, very possible. It's very reasonable. It's very feasible, all right? And I've shown you that with the numbers here, and they make sense. And you guys can, of course, be the judge of that yourself as well. But my point being that the $2 to $5 target, very conservative, guys, and this is very, very, very exciting, of course, for all of us HBAR investors. Now, compare that to the current price at 30 cents. Compare that to the price at 30 cents with everything that I've just shown you in this video, and you can see why I still think that HBAR is probably the most undervalued asset in the top 50 crypto coins. Guys, this pretty much wraps up my video. We've talked about the fundamentals. We've talked about the technicals. We've talked about the updated price predictions. Guys, if you enjoyed this video, please like, share, and subscribe. It's what motivates me to keep making these videos. And again, as I mentioned in the beginning of this video, if you guys want shorter videos more occasionally, more frequently, let me know in the comments section, guys. Let me know what you enjoyed most about this video. Let me know what you want me to focus on more in future videos, so that I can, tailor this content towards you guys, my followers and my subscribers. Guys, that's it. I hope you guys really enjoyed the video. I enjoyed making it. It took a lot of time, but I'm glad I did it, and I hope you guys enjoyed it. All right, thanks, guys.